The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. Do you have a phone? Make the call, 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. They don't provide the APRs, points paid, points received, just locked rates. But they have a 42% market share, so they're pretty accurate. 30-year conforming loans yesterday, they locked at 7.83. 30-year jumbo loans locked at 7.878. FHA locked at 7.496. USDA, rural areas, generally no down payment, 7.568. And the best loan on the market for those that earned it, that would be the 30-year VA loan, locked at 7.49. And as you know, every morning, every business morning, we do come out with our market commentary, our thoughts for the day. You can get that free, rsrmarketminute.com, rsrmarketminute.com. Let's take a look and see what the markets are doing this morning, being that we looked at yesterday's numbers. Well, we've got the S&P 500 is down 47 points right now. We've got 10-year Treasury is down 6 basis points. Means interest rates on that yield is up just a little bit. But the nice one is the mortgage-backed securities. That bond is up 30 basis points. Means interest rates are down a little bit right there. That's good news if you're thinking, or if you're on the fence thinking about locking a loan. So let's see why this is happening. Well, yesterday we saw a sell-off in the bond market in response to a very weak 5-year Treasury. Demand was the smallest we've seen in over a year at a time when more supply is being issued to fund our debt. Surprise, surprise. Be on the lookout for the 7-year auction. That's going to be today. Another weak auction could give us some problems again. The Bank of Canada left rates unchanged yesterday, citing that the global economy is slowing and the recent surge in global bond yields has weighed on demand. They did leave the door open to do more if inflation starts to rise again. What's going on with gas prices? Of course, inflation is going to rise again. The European Central Bank also paused after 10 straight hikes. They generally follow what the U.S. Federal Reserve does, but they're slower. Q3 GDP first reading came in at 4.9% annualized pace, hotter than the 4.3 expected. They'll revise it, don't worry. Durable goods orders in August were up 4.7%, which was much stronger than expected. But this figure is heavily influenced by aircraft orders. When removing them, the index was only up 0.5%. Initial jobless claims measures individuals filing for unemployment benefits for the very first time rose 10,000 to 210,000. Continuing claims, those that continue to receive benefits after their initial claim, rose 63,000 to 1.79 million. These have risen by 132,000 over the last 6 weeks. This report continues to show that employers are holding on to their workers and remains at very low levels. We're going to see some decent numbers as these strikes that are going on all over come to a close. Pending home sales. No, California, you don't get unemployment, but in a lot of other states you do. Pending home sales, measure signed contracts on existing homes, rose 1.1% in September, which was stronger than the 2% fall that was expected. Diana Olick is probably crying right now because she can't give another negative report on real estate. Sales are now down 11% year over year. This comes on the heels of a much stronger than expected new home sales report, which rose 12%. We know it's tough out there, but we're seeing some resiliency in the market. And when rates turn, well, everybody's going to be looking then. CoreLogic Loan Performance Insights reported that loan performance remains strong in August and overall delinquencies remain near record lows. Those of you thinking you're going to get a deal because of foreclosures and defaults, maybe, just not anytime soon. Those 30 days or more delinquent fell back 2.7% from 2.6, while 90-plus days fell from 1% to 0.9, lowest in almost 25 years. Those in foreclosure stayed just off the lowest level on record at 0.3%, even though some delinquencies like credit cards are rising. People are clearly still paying their mortgages because they've got equity. We've got the PC report coming in tomorrow. We'll talk about that one. And that is the Mortgage Minute brought to you by our friends at Geneva Financial.